Welcome to today's market report. European stock markets are set to open mixed today, consolidating after the sharp sell-off in the previous session, aided by a rebound in consumer confidence in Germany. However, market confidence has been hit by increasing US coronavirus cases and a global growth downgrade from the International Monetary Fund. At 7 o'clock this morning London time, the DAX futures contract in Germany traded 0.1% higher. CAC futures were largely flat. FTSE 100 futures contract in the UK fell 0.4%. The GfK German Consumer Climate Survey showed a more significant improvement in sentiment in Europe's most important economy than expected, with the July number coming in at minus 9.6 compared with the expected minus 12, and a hefty jump from minus 18.6 the previous month. Attention will turn later in the session on the release of the minutes from the last meeting of the European Central Bank's Monetary Policy Committee, the meeting where the central bank increased its pandemic emergency purchase program by 600 billion euros. The major European indices had all dropped around 3% yesterday, while Wall Street saw its worst day in 2 weeks, with the Dow Jones Industry Average shrinking more than 700 points. The trigger for the sell-off was the move from the International Monetary Fund to cut its 2020 global output forecasts further, saying the coronavirus pandemic has caused more damage to the world economy than first thought. The IMF said now expects 2020 global output to shrink by 4.9% compared with a 3% contraction predicted in April. However, the more important factor behind the selling was a surge in coronavirus cases in the United States, particularly in the states where restrictions were lifted early. This prompted the governors of New York, New Jersey, and Connecticut to announce that visitors from states with high coronavirus infection rates must self-quarantine for 14 days on arrival, increasing fears of fresh lockdowns in the world's largest economy. In corporate news, Lufthansa will be in the spotlight today after the troubled airliner said it had agreed a deal with a workforce union that will save more than 500 million euros. Bayer will also be in focus after agreeing to pay up to $10.9 billion to settle tens of thousands of lawsuits with U.S. plaintiffs alleging one of the company's products causes cancer, ending a prolonged legal battle. Oil weakened today as well, extending the previous session's hefty losses as record-high U.S. crude inventories revived fears of a supply glut amid concerns about a hit to fuel demand from a resurgence in COVID-19 cases. Wednesday's sell-off came after U.S. government data showed crude stockpiles rose by 1.4 billion barrels, driving inventories to a record high for a third straight week last week. On the FX front, the pound fell against the dollar yesterday as fears of a second wave of coronavirus infections and news in the United States is reviewing tariffs on European products curbed global risk appetite and boosted demand for the safe US currency. The dollar rose after the US said it was considering tariffs on $3.1 billion of exports from Britain, France, Germany and Spain. British Prime Minister Boris Johnson has unveiled an easing of lockdown restrictions in England, but top medics signed an open letter on Wednesday in the well-regarded British Medical Journal, warning of the risk of a second wave. Concerns whether Britain can get a deal on its future relationship with the European Union also weighed. The euro bounced following a sign of recovery this month in the Eurozone economy's downturn caused by the coronavirus pandemic. IHS Markit's Flash Composite Purchasing Managers Index, seen as a good gauge of economic health, recovered to 47.5 from May's 31.9, moving closer to the 50-part mark, separating growth from contraction. In April, it hit a record low of 13.6. The dollar held the upper hand overnight as an increase in coronavirus cases in the US and fresh trade tensions undermined hopes for a quick global recovery and prompted investors to trim bets on riskier currencies. In California, which has seen sharp rises in new cases in the past few days, Disney Parks said it will delay reopening of theme parks and resort hotels. While some investors expect the economic impact from second wave infections could be smaller than the first one, others worry that policymakers might fail to respond forcefully and risk further economic damage. The dollar index was up 0.2% this morning at 97.293. This is today's market news. Thanks for listening. We'll see you next time.